What's up, snipers? I hope all is well with you. It's the 2nd of January, and we are getting into the new year, guys. So, today is going to be part one of a four-part structured video sequence of us understanding institutional concepts. Okay? Now, these four concepts will just help you understand basically how institutional trading works, how the banks move the market, and so forth. All right. Now, utilize these four concepts with your strategy to have the most effect on it. But I promise you guys, once you guys learn these concepts, you guys will be a beast on the charts. All right. So let's go ahead and get into it. All right. Today, we are going to specifically go over, here we go, part one, bank order flow and manipulation. Okay, so basically today we're really going to be talking about the basics of institutional trading, okay? How the banks move and manipulate the market so we can basically know. Now, for part one, bank order flow and manipulation is really just the basics of institutional trading and will really give us an idea of how the banks are moving the market so we understand how to utilize that information to capitalize on it. All right. So, first, when we talk about bank order flow, all right, bank order flow key understanding is a key concept to understand, excuse me, right? Because it will help you understand how the banks are moving the market, okay? So here we're on the 1 hour time frame. I actually want to go ahead and give this as our first example of our bank order flow, okay? So manipulation is very easy to spot out, right? We see price pushing up in a very fast way with a lot of volume, right? That's banks pushing the market, and then banks push the market back down. Okay. Now I want to show you how when price moves back down and we clear that low here, we see price come back up and retrace into the last candle before we went in the opposite direction, and then we continued. Same here. We retraced back up into the last candle before we pushed down, and then we continued. Okay, so I'm gonna really break this down so you guys can understand what this really means and why the banks do this. Okay, so when understanding bank order flow, all right, we have to understand that the banks have unlimited, what's that? Unlimited capital. Okay. Now, if you guys didn't know this, all right, your central banks, all right, are the ones that is manipulating and moving price in certain directions. Okay, I know this is very hard to understand, but no, your lot size in a trade does not matter and does not take any importance when the market is moving. It is all based off of banks moving and driving the market in a certain direction. All right. So as we can see here, we have this leg of price, right? That shows us that we will be going in one direction. And we'll talk about direction another time, but I just want to go ahead and give you guys the understanding that here we have this massive buy candle here before we get into our sales. All right, and then what happens? Price retraces back up into this candle to then continue in the opposite direction. All right, so here, this is basically just banks placing massive orders to push the market up in this one direction to then push the market back in the opposite direction. Now, the reason why we retrace into this area is because these bank orders have been left open. Okay, this is what we like to call hedging the market. All right, so when hedging the market with understanding bank concepts, when hedging the market, these orders are always going to be left open. Okay, so meaning that once price goes below these orders, they are in drawdown. Remember, banks have unlimited capital, so it does not matter that they go in drawdown because they have an unlimited amount of capital. Okay, they can be in drawdown for years. All right. Now, when price retraces back up into these areas, what do you think that we're doing? We're taking away these orders that have been left open. And I want you to kind of think about this as like a scale, right? Like a weighing scale. On the left side, you have buyers, and on the right side, you have sellers. Now, based off of how many lots and how much money is in the market, one side of the spectrum, either buying or selling, is going to overcome the market, and we are going to go in that intended direction. So because we've taken out these buy orders, now we have a overflow, right, of selling orders. And this is why we see volume, some nice volume candles on the 15 minutes start to come, right? And we have the same thing here, right? Price breaks the low, retraces back up into that last candle before we push back down and do the same thing. Last candle before we push back down. Boom. So this is how we can understand order flow, right? Where we see price having these orders being placed in one direction to hedge the market, then the market pushes in another direction. Then we retrace. When we retrace, we take out these orders that have been placed to hedge the market. Okay, and then we start to go in that intended direction. Right, so now we see here, because we have very volumed body candles, this is very significant to understand. All right, because volume candles means there's a lot of money in the market at that specific moment. Now we see price retrace back into this high, right, where we see these orders have been left open. Now when price reaches these areas and these orders start to get taken out, what do we see? We see price have a drastic change in momentum and go in the intended direction that the banks wanted it to go in, and clearing any old lows. Boom. Okay, and we do the same thing here. Boom. But then we have a change of direction. Okay, so this is basically how we see order flow in the market. Okay, so sometimes you'll see people say, oh, we're going to break and retest here and so forth. That is not necessarily how banks are moving the market based off of support and resistance. It's a little bit more complex than just drawing up levels and seeing which ones breaks and retest. Okay, so use this. All right, and now we're going to go ahead and get into some buys. Okay, we're going to go ahead and find some buys. Here we go. What do we see? We see a selling pressure, selling momentum, pushing down and clearing a low here. Okay, so this is indicating that this is the last selling point before we push up. Okay, now that we know that this is the last selling point, from body to body of the last selling candle, that is basically where the orders that you want to be looking for are going to be in. All right, now we will get into different concepts like imbalances and liquidity and premium and discounted ranges of price, but as of right now, I need you to understand that these orders are here being drew up, being hedged, so we can push the market in one direction. And I'll show you guys why the market always gets hedged. All right, because there cannot be any. Yeah, I'll just show you guys in a minute so you guys can see it. But as of right now, we see these orders being hedged before we push the market back up, and then price comes back, grabs these orders around this area, and then boom, we continue with that leg of price of direction, that buying pressure, right? And then what happens again, even on the smaller scale, we see a break of that high, retracement back down into the lows of this leg of price here. Boom. This last selling candle is exactly what we're looking for right here on a 3-hour time frame. And boom, price comes directly into this, clearing some liquidity, and boom, going in that intended direction again. And then what happens? The last point of selling pressure, we can actually utilize these two candles. All right, we can go down to the 1 hour for this one, okay, because there is 30 minutes. There we go. Now the reason why I did that, guys, is so you guys can see the last candle, the last volume candle, okay? Because yes, you guys can use this whole point of selling pressure as your, you know, area that you're looking for the bank to come back and take these orders out, but I always look for the last point of selling pressure. So here is what I'm looking for, and as we can see, banks come back down, grab these orders that have been left open, bang, 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 all right, and then boom, we push in that direction. And literally, guys, this is how simple it is to understand how banks are moving the market with orders. Okay? Now, manipulation, all right, is a little bit more complicated. Okay? So let's actually move into that now. Okay? Manipulation is basically what we see when we have basically some support or resistance in a certain area, but price takes out that area and then continues in the exact opposite direction. Okay, so here we go. Usually people will sell at these resistance, at these highs, but here we see price take out that high and then continue in the direction that people were already intending to do that. That is considered manipulation. Now, when price manipulates the market like this, you can have a high probability chance of having a successful trade in that intended direction, right? So we took out this high and then boom. All right. Even here, this is a nice manipulation candle where we see price taking out these lows and then pushing the market higher. All right. we can see again here, right? People are looking to sell here, but price manipulates by taking out this high. This is considered a Wyckoff schematic, but I don't really use that. This is just, ways of manipulation. We see 1, 2, 3, bang, and then we see price move in the opposite direction. Boom. And then we go back to our first example where we see our order flow and how price is moving. All right. So guys, manipulation will help you because you want the market to manipulate first before you get into the market. I'm gonna actually write this down. Wait for market to manipulate first before get into the market. Okay, perfect. All right, so guys, this was a quick video, but I wanted to make sure that you guys understood order flow and understanding how the banks move and manipulate the market. All right, and I also wanted you guys to see how manipulation works and how you can take advantage of that when you see manipulation. All right, guys, thank you guys for watching this video. Stay tuned for part 2 when we talk about true support and resistance and balances. All right, stay blessed, not stressed. Stay Stiper. Let's get it.